And there we go. Thank you. Today's presentation is targeted at both financial practitioners and students. If you would like a copy of the slides, you can send an email to cfpb_FinEx@cfpb.gov. The slides, transcript, and recording will eventually be posted to our website, and we will send out a mailing when a new batch of webinars has been posted, as we're working through a little bit of a queue for those. So watch for those announcements through your email from CFPB. Next, I will introduce our speaker, and then I'm going to read a brief disclaimer, provide a quick introduction to the FinEx program for those that are new to the CFPB FinEx webinars. After that, we'll transition to our presentation of the day in just a few minutes. So first, the disclaimer. This presentation is being made by a Consumer Financial Protection Bureau representative on behalf of the Bureau. It does not constitute legal interpretation, guidance, or advice of the Bureau. Any opinions or views stated by the presenters are the presenter's own and may not represent the Bureau's views. The inclusion of links or references to third-party sites does not necessarily reflect the Bureau's endorsement of those sites or of any of their products or services offered by the third-party sites. The Bureau has not vetted these third parties, their content, or any products or services they may offer. There may be other possible entities or resources that are not listed that may also serve your needs. For those that aren't aware, the CFPB's mission is to be a 21st century agency that helps consumers work with financial markets by making the rules more effective, consistently and fairly enforcing those rules, and by empowering consumers to take more control over their economic lives. And our financial education program and financial education exchange are a part of that. This is the landing page for the adult education webpage. The link is on the left, in the top left corner, and you can go to this page if you would like to find out about upcoming webinars. We are updating those regularly now. And on the right, we also have a box where you can enter your email if you would like to sign up to receive announcements. So if you did not get an announcement for this webinar and you would like to receive one, please make sure you put your email in that box at some point before the next event next month, because you got both announcements for this month already. And you'll get updated, and that's also how you'll get updated if slides are posted or we have other announcements that you'd be of interest to you. Also on the page, you can see underneath the box, the field where you put your email, in the lower middle part of the right column, you'll see Join Financial Education Discussion Group. That is our LinkedIn page, and you're welcome to join that and post announcements that you may have that are relevant to financial practitioners. Okay, these are the key links that I provided, and you can see that also I have in the third bullet is the email address if you need to write, ask questions. Feel free to take a picture of this if you want to keep it for later. And I wanted to also highlight our coronavirus page. It has been revised, so you may land there and not see the little picture of the virus, but you're on the right page. And it really is updated regularly and has wonderful information, including a really robust mortgage and housing assistance portal, and information on avoiding scams, which are on the rise, as well as student loans from our students office and team, of which our representative today is speaking. Okay, I'd like to introduce Brian to you. Brian Stone serves as a policy analyst for the Consumer Financial Protection Bureau in the Office for College Students and Young Adults. Previously, he worked as a program manager for a DC area financial education nonprofit. While there, he managed a match savings program for 100 foster care youth and provided financial education services for low and moderate income individuals. As part of his previous employment, he also reviewed credit reports with clients, created actionable budgets, and provided staff financial wellness training for the DC Child and Family Services Agency. Prior to working in financial education, Brian completed the Bill Emerson National Hunger Fellowship and worked as a paralegal for the Department of Justice and the Federal Trade Commission. Brian is an experienced financial practitioner and a valued colleague. Welcome, Brian. We're looking forward to your presentation.
Good afternoon. Thanks everyone for joining, and thank you very much, Heather. And I will move the slides once I get the ball. Thank you. And so yes, so as Heather has said, my name is Brian Stone. I'm a policy analyst in the section for students and young consumers. And so today I'll be discussing strategies to pay for college. But along with that, we'll also be talking about budgeting, shopping around for bank accounts, optimizing financial aid, and more. So that's a little bit more about. So budgeting for less stress. So we'll talk about what is budgeting, why does budgeting matter, and how do I set up a budget, and how do I stick to a budget. And so what is a budget? And quite simply, I like to think of it as your income minus your expenses. And so your budget's a tool to help you meet your financial goals. And a budget is also similar to a financial GPS. And so you know where you are, you have ideas about where you want to go. And so that it could include paying and saving for college, you know, a lofty goal of, you know, retiring comfortably in the future. And so it's just going to be that tool that's going to help you get there. And so what if you don't have a budget? We'll talk about some ways to develop one and some of the tools and resources we have to help you do that. And so within your budget, we have our needs, we have our wants, we have our obligations, and of course we have savings. And so that should, you know, be at the top of our list that we want to definitely pay ourselves first. We have different expenses that are also going on at different points of time in the month. So we have childcare expenses, cell phone, could be education costs, debt payments. And so we want to be able to put all of that in one particular place so we can manage it effectively. And so how can you do that? So again, if you don't have a budget, this is a great resource that's on our website. It's a spending tracker. And so the spending tracker, the good thing about it is that I think it's forward-looking and it's also backward-looking. So you can essentially start where you are. And so if you want to use it going forward, you can keep spending as you are. You have your different categories, and you can also add categories to it. And you're just tracking your spending that you're doing throughout the month. And then you're going to use this to later create a budget, which I'll talk about. But you also have the option of looking backwards. So you can take your bank account, use this tool, you know, go through and see how much I spent on my cell phone, how much I spent on eating out, how much of my education expenses, and get a sense and develop a budget from there. And so cutting expenses. So once we get to the point where we understand our expenses and they may not meet our goals, or we may be overspending, or, you know, we want to better channel our resources. So we can look for different opportunities and areas to cut. And so a lot of those might be in the way of a subscription. So something that you're paying for that you might not need or want, or you may forgot about. But you can also take this and think about it and take an offensive approach in that, you know, for car repairs, you can, you know, get oil changed regularly, take care of different repairs like tires, and so they won't end up costing you more down the road. And also avoiding things like late fees can also be an offensive strategy when it comes to budgeting. And so how can you improve your cash flow? And so we talked about different ways. And so this is sort of the third step in the process that we're getting to if we don't have a budget, and to developing one. And so you can negotiate bill due dates. And so one thing that's commonly done, and I know I personally do this occasionally, is shift my bill due dates in relation to when I actually get paid. And so which makes it easier, instead of having things sort of spread out throughout the month, actually connecting those expenses to that income. And we'll talk about a different type of budget that you can actually use to help you better manage those expenses. But another step or strategy is that you could split large payments into bi-weekly payments bi-monthly. But essentially what it does is it allows you to take a large payment, break it down. And so let's say example for rent. So if your rent was $700, which maybe for a student, but you can take that and split it into biweekly payments of $350. And what you'll also find out is that by doing that, at the end of the year, you'll have that extra payment either you can stash away, and it also works with mortgages and other debt payments, and that you can pay off your debt faster by essentially making that one extra payment a year. So that's one way. And you can also save on fees and interest. thing. And so type of a budget. So a budget goes by many different names. You can call it a budget, you can call it a spending plan, a cash flow plan, whatever works best. But this is an example of a cash flow budget that's on our website. And so what this budget actually does is it breaks down income and expenses on a weekly basis. And so you could take this and tweak it and also do it on a bi-weekly basis. For example, if you get paid bi-weekly, you have your income listed out. You will list those expenses that's going to take place in that first half of the month. You will subtract those expenses from your income, and any excess that you have, you would carry over to the next, pay period and add it in, and then you would repeat that process. And so what this does, again, we talked about reducing stress, and is that I know one thing that I used to do, actually when I was a financial coach, I would do, for a lot of clients, I would do monthly budgets. And so I was creating these great, which I thought were great, monthly budgets. And it hit me maybe a month or two in that the clients I was working with were getting paid bi-weekly. And so what I was doing, and even though I think the monthly budgets were extremely accurate, was that I was adding an extra layer of complexity for them. And one technique and tool we want to use but when it comes to budgeting is being as simple as possible and make it as easy to use as possible. And so this is just one example of an opportunity to budget, slightly different. But again, and so with students, this could be a semester-based budget. So it could be something that they're looking on based on those different expenses and, the funding sources that they have coming in. They may want to zoom out and look at this on a semester basis, but I'll talk more about those expenses, student-based expenses, as we go on. And so now that you have a budget, so we followed those steps, we have a sense of, our needs and our wants and our obligations, what's important to us. So, and prioritizing those things and maybe cutting our budget. So cutting some of the things out that are not as important. We want to look for different ways to, make it easier to stick with the budget. And again, I talked about simplicity. So we want to be realistic. And so the idea is that, if I just started budgeting this month, it may be hard to cut my expenses completely in half. And that's perfectly fine. And so a budget is similar to like working out. You get that muscle memory in. It may take 2 or 3 months. You have some pain. It takes longer to, work out than you want to or you plan to. But the point is that you're building that habit and you're building that consistency, which makes it easy to stick with as you go on. And then we talked about some of the changes that you can make, the quick changes you can make at first, cutting those subscriptions you might not use. So I use the analogy of going to the gym. Maybe you don't go to the gym, but you're paying for a gym membership. That's an easy opportunity to cut that expense. Or you're paying for a subscription to a streaming service and you don't use that streaming service because what tends to happen is that it doesn't seem like much, but those expenses tend to add up over time. Or we signed up for a free trial and the trial is no longer free because the 7 days have passed. So that's something to think about. And then looking for new challenges. So maybe instead of eating out, learning to cook. I know that's something that I could probably do more of as far as the cooking. And then thinking about ways, maybe you can cut expenses by taking public transportation if that's available instead of driving, and just making it a fun. And there are all different types of challenges throughout the internet to think about as far as like saving and sticking to a budget. So there are a ton out there, but just thinking about it from a gaming standpoint, and then setting a reminder to check in. And so once you make that first budget, you want to set a time to either check in with yourself, and if you have a partner, significant other, checking in with them. If you don't, find an accountability partner. And so just someone that you can travel this financial path with. And then, setting goals and celebrating those victories. So those baby steps, and once you achieve them, it may not be your big lofty goal of, maybe saving enough in a 529 account, but once you save maybe that first 100 or that first $500, celebrating that because that is something, and that's a step that you're actually taking to get you towards that goal. Okay, and then shopping around for bank accounts. And so our students, of course, when they get their first bank account, they haven't, in some cases, students going to college with a bank account. In other cases, they haven't thought about it, but it's always good to just think about your banking relationship and developing that banking relationship and finding the banking tools that work best for you. And so you don't want to feel limited to a bank or credit union just because it's near your campus. There are a lot of wonderful online opportunities and bank accounts that might work better for you, or if you enjoy the traditional brick and mortar bank and you like walking in the door, maybe something that's close to your home or close to your school or close to your work might be best. And then taking a deeper dive into accounts when you're thinking about you see the flashiness, or something's free or something's easy to use, but really understanding what fees may be associated with a bank account and the requirements. And so it may say free on the surface, and then you take a deeper dive and you have to meet a monthly deposit minimum or keep a certain amount in your account. And as a student, that may be tricky, or use your debit card a certain amount of times with, again, the different expenses coming at different times in the student life cycle, but we'll talk more about those. And then understanding various account fees and strings that may be attached. So the account may be free if you open a savings account also, or something to that effect. And then just being realistic. So understanding that, accounts, they offer bonuses, but what does that mean for you, and how does that work into your financial needs? Because having an account that works for you is better than having multiple accounts that may have offered some bells and whistles, but they don't necessarily work for you. And then making sure you sign up for a direct deposit with school or employer. Okay, and then the same goes for credit cards. And so you want to make sure you think, and before you even get the card, you understand like how do you plan to use it. And so will you be carrying over a balance? And so if you're carrying over a balance, the interest rate is going to be extremely important. And then other terms you care about, like the annual percentage rate, any fees, if you miss a payment. And so maybe if you've had trouble consistently sticking to a budget, and taking on a credit card and making a monthly payment might be too much for your financial situation. So it's just something to think about. And again, this is all personal, so it's a personal level. But in understanding, if I miss that one payment, like how can that potentially impact my credit, but also how can it impact my annual percentage rate? So maybe there's a 6-month penalty interest rate if I miss one payment. So it's good to understand those things also. And then understanding where can you get the best deal. And so sometimes when you have a credit union or a bank and you have one product with them, if you add another one, there may be some special opportunities there, or rates, or maybe travel points and those types of things that you can take advantage of. And so, and just remembering that and you're applying for some of the bigger things like an auto loan, a home loan, private loans, that you can do multiple in a 14-day period, and they won't necessarily hurt your credit score. And so, but on the flip side of that, applying for a lot of credit cards in a short period of time can have an adverse effect on your score. So just making sure that you understand those things before you embark on the path to get a credit card. And then, so we'll talk about optimizing your financial aid. And so for many students and families, paying for college is one of the most complex financial situations that I actually be in. And so there are a ton of different funding sources. You have federal grants and, federal loans, and we'll talk more about these later. You have private loans, private scholarships, state-funded aid, work study opportunities, and the list goes on. And then you have those expenses. And so those expenses happen throughout the student life cycle. Tuition and fees, dorm fees, club dues, parking, cell phones, and, a laundry list of other fees. So, but on the middle of the equation, of course, you're trying to connect the money with the actual expenses. And so, again, that's why the budget, we led with the budget part, because that's going to help and be important in managing some of this. And again, reducing stress, because it is, for the most part, a stressful time period. A lot of students are embarking on they're moving away from home. They may be starting a different higher education program, a certificate program, and in a new environment, but also trying to maybe work or pay or, participate in an extracurricular activity, all the while, matriculating through college in order to reach their main goal. But yeah, so there's some ways that parents and families, some non-financial ways you can help support students, and that's by, one, providing information for the FAFSA so it can be completed in a timely manner. So the FAFSA, the federal application, free application for federal student aid opens October 1st, and so sometimes we'll hear that families are unfamiliar with the financial aid process, and so the first question is when the student comes home and asks, like, hey, Mom, can you give me your tax returns and your Social Security number? The first question is, why do you need this information? So really working to understand the process and how it works, and that the importance of filling out the application, and that pretty much anyone, for the most part, embarking on a higher education journey, that should be one of the first steps. So you should complete this form as quickly as possible, because it's going to open up the federal aid, but also possibly see other opportunities at your institution, which I'll go into. But also helping research for grants and small scholarships. So that's one thing, or scholarship opportunities, but also the smaller scholarships. Because students tend to overlook those, so the community-based ones, and so they could be $400, maybe $200, but you know, the larger scholarships tend to have a larger applicant pool, so you know, probability, the likelihood that you'll actually get it, you know, it decreases somewhat, but the community-based ones tend to have, you know, a smaller applicant pool, even though they're smaller dollar scholarships, but if you get enough of those, you can cover books, or you can cover, or even more than that, you can cover a portion of your tuition. But statistically, you know, every dollar that a student pays up front, and so that could be by scholarship or grant, and doesn't take out in a loan, will potentially save them $2 down the road. And so that's just something to think about. So any small, and I say all that to say that any small amount, even $100, $50, whatever, that is not taken out on the loan definitely helps in the long run. And so, and then helping your students make a budget, sharing your family's financial situation and thinking about cost-cutting strategies during this time is important. And also considering, you know, as a resort, the Federal Parent Plus loan, if that's an opportunity. And if you're denied, it could provide a student access to the direct unsubsidized loan. And of course, once they start school, we want to continue to complete the FAFSA because it has to be renewed. If staying at home is an opportunity, taking advantage of that opportunity. And then one of the important ones, and this was an important one for me also, building relationships while you're at school. And so we speak with a lot of academic advisors, financial aid officers, and one thing that we hear is that students don't always take the opportunity to engage after they're on campus. And so once they receive their financial aid award package, some students tend to think that it's like written in stone, so this is it, and I have to figure everything else out. But no, there's often times where the financial aid officer will have a scholarship that may not be as widely publicized, or there may be other funding opportunities that a student may qualify for. And so, and you find those out sometimes by, again, taking that step of actually physically walking into the office, as I said, which is I had to do a couple of times. And then as a parent, you want to be, or guardian supporter, you want to be honest about your past financial missteps and encourage them to use their resources, so use what's available to them. So even if that means, you know, and this is post-graduation, so maybe after the senior year, during the summer, I'm going to work, and maybe I can earn $100 or $1,000 or $2,000 or something like that, and that can actually still defray the cost that I was talking about, because again, every dollar saved is going to potentially save you $2 or more down the road. And then being upfront about limitations. And so there's a saying that there's no scholarships for retirement, but there's also no loans for retirement. And so that's something that we really push. And so it's just important to remember that you don't want to trade off your future retirement security by over leveraging yourself to, you know, maybe and straining family resources to pay for higher education opportunities that may not fit your budget. And then using federal tools for students and families. And so the first point of entry, of course, when it comes to the federal financial aid process, is always the Department of Education. And so, and especially, and I'll talk about COVID resources in a moment, but anything related to student loans or related to deferments or related to the financial aid process comes from the Department of Education. And I say that a lot just because there are a lot of scams and different actors out there that will present themselves as that they have some inside information or started a business to help people circumvent the process, but that's not the case. And so, and we'll talk more about that later, but by visiting studentaid.gov, that's where you can find out everything as far as your your federal resources. So your the direct loans, your Pell Grant, the FESOG grant, any aid that you might have been given. And you can also establish your FSA ID there, which allows you to log into your account so you can view all these things. And then before applying to college, another Department of Education resource is College Scorecard. And I'll say we actually have a upcoming podcast which will dive more into the College Scorecard, so which should be coming out next month. So you just keep your, and I'll tell you how to access that also. But we actually have an expert from the Department of Ed on talking about College Scorecards, the benefit, and how families can use it to help them achieve their goals. So. But you can look at colleges by family income level and understand aid that a family may have received. You can understand outcomes of completion, the median debt that a the median debt that a student ends up with, and also monthly payments on loans, and then salary outcomes. And then you can compare different institutions. And so these are all types of higher education institutions. So that's definitely a tool you want to use. And for military families and veterans, the GI Bill comparison tool from the Veterans Administration. And we actually had them on the podcast back in November. So I will post a link to, I will drop a link to that towards the end of the presentation. But we actually had someone on who's the director, and she talked about, just the benefits of it and how you can, a family can use that to leverage their GI Bill benefits. And I'm going to drop that. It should be in the chat right now. So if you want to take a look at that episode and learn more about those benefits. And again, College Scorecard, we're also going to have an upcoming podcast episode about that. Okay, and then different types of aid. And so the aid sort of fall in a couple of different buckets. And so one of the buckets is that one that doesn't have to be repaid. So it's going to be, those will be scholarships and grants. And so you can have scholarships that are school funded, state funded, from private organizations, or maybe even the ROTC. And then you have grants, and those grants can come from the federal government, from the state, and from, maybe a school tuition waiver, or maybe military-based for military families. And then you have the ones that you earn, and those could be work study via federal work study and non-federal work study, or non-federal work. And then repaying the things that must be repaid. So that third bucket, again, that's going to be federal subsidized loans, or the Parent Plus loan, a loan from a state or nonprofit institution, a school issue loan, or a private loan from a bank or credit union. And then to think about how all these costs fit together, and your cost of attendance, and also your expected family contribution. And so your expected family contribution comes from the FAFSA application formula. So once you, again, and it opens October 1st, you enter in all the information, the student enters in their information, and then the formula does its thing, and then there's a number that pops out, and the number could be 0 or it could be more, and that's not necessarily something you have to pay. It's just based on the federal data and information. It's the amount that your family could potentially pay based on, but it may not be based on your actual ability, based on your budget. So I'll say that. But then for financial need, and this is the max amount of, this is need-based aid, and so this could come from government, school-funded grants, work study, or subsidized loans to cover that portion. And then for non-need-based aid, and this comes from merit scholarships, that can be from school, private organization, the direct unsubsidized loan, plus loan, and private scholarships again. And these things could also bridge that gap between your expected family contribution, because again, that may not fit your current family financial circumstances for whatever reason, and then the need to actually cover the cost of the institution. And then depending on your financial situation, how do you appeal for more aid? So maybe there's been a decrease in income in a household for various reasons, especially during the pandemic. We've seen that. And so how to appeal for financial aid? So the first thing is, of course, you want to document your actual costs and compare those to the school's estimated cost of attendance. So your costs could be more for whatever reason. So maybe you have more healthcare expenses. You might be paying more for childcare. You have some disability expenses. There's a study abroad that you want to go on that's not necessarily calculated in the number. You need a laptop, or there could be a family circumstances. Again, you just want to be able to document that and provide it to your financial aid office. Also, you want to check last year's FAFSA for funds you may no longer have, especially in the pandemic. And so we saw, unfortunately, some families, again, lose income, maybe lose a job, maybe have hours cut. And so but that information, so maybe 2 years prior when the FAFSA is actually using the information to calculate your EFC, that was today's situation wasn't necessarily your family's current situation or previous situation. So maybe you were gainfully employed, you had more income, and now there's been a change. So you just want to be able to show that. And then again, the third one, last but not least, talking to the financial aid office. So no matter what, because there's always those opportunities, and you may be able to find out about something or an opportunity that wasn't advertised or is about to be advertised. So. And then how do I manage my student loans during COVID? Okay, so CARES Act benefits for federal student loan borrowers. And so and we're probably all aware that there's been an automatic suspension of principal and interest payments on federally held student loans. And this started in March of last year, and as of right now, it's through September 30th of this year. And so essentially what that means is interest rates are set to zero and will not capitalize at the end. So you won't have any interest that's accruing during this 19-month period that will be added to your principal. Suspended payments are not missed payments, and they're reported to your credit bureaus as fulfilled. And so if you look at your credit report, and in your credit report, it could be any of them that's your student loans reporting to, so Equifax, Experian, or TransUnion, you see your loan, it should show that it's paid as agreed, essentially, if you were making the payment. And then suspended payments do count towards loan forgiveness. So if you, including public service loan forgiveness, and so this is something to think about, that if you, and we'll talk about which loan qualifies because I think that's very important, but if you are pursuing public service loan forgiveness, as an example, if you're pursuing public service loan forgiveness as an example, and you meet the other requirements, there may be an opportunity to, again, these months, if you meet all the other requirements, again, you can apply these months towards that public service loan forgiveness or another forgiveness program. But what's important is which loans actually qualify, and so which loans are eligible. So the direct loans, federal direct loans are eligible, and essentially those are going to be loans that were made in 2010, so after June 30th of 2010. Federal family education loans, so loans that were part of the FFEL program. And so there's a caveat to that, which you can actually see on the next bullet point, and Perkins loans owned by the Department of Education. And so which loans are not eligible. So that same set of loans, but those loans that are owned by commercial lenders. So loans that were under the FFEL program, if you have those or maybe know about someone who did have them, they were made before June 30th, 2010, and essentially those loans were owned by commercial lenders. And so it was a part of the federal loan program, but it was owned by a bank or a credit union, and that's who you would go to as your loan servicer. And so Perkins loans also that were held by the school, but after the loan program switched to the direct loan program, some of those commercial lenders and schools sold those loans back to the Department of Education, and that's why you see some that may qualify and some that don't. But the first point of entry, if you're not sure, is to contact your lender, and so that's the person who you may be receiving the bills from. And or if you don't want to do that, you can always visit federal student aid by going to studentaid.gov and logging on, and then seeing who's your lender or servicer. But private loans, so private loans are owned by banks, credit unions, or maybe the school, and they don't qualify. And so what happens when CARES Act benefits end? And as of right now, as I said before, they're supposed to end September 30th, 2021. That could be extended, maybe it won't, we're not sure right now, but you expect more information from the Department of Education and also the President. But your automatic payments may resume in the same manner they were before. So if you had those payments set up, but the first and most important thing is that you would just want to check with your servicer to make sure that your payment information hasn't changed, because again, it's between then and now, it's been about 19 months. And then you just want to make sure they have your accurate information. You can also ask them, and you can reasonably expect information from your servicer and again, the Department of Education. And so if you didn't have automatic payments enabled, again, you're responsible as before. It's just kind of like a freeze period. We're making those payments before the established due date, but you can expect your bill to be mailed to you 21 days before it's due. And if the date has changed or you wish to change the date, you can also contact your servicer to, again, as I mentioned before, to move around the date. Okay, and then if you're in a situation where you can't make payments, or maybe your personal finances have been impacted by the pandemic, again, the servicer is always the first point of entry for additional options. And so you may be able to recalculate your payments based on your current income. And so there are various repayment plans, income-driven repayment plans that might work better for you. You can also reduce your payments by, again, switching to a different payment plan. And then you can sign up for deferment or forbearance. and you may not make payments for a period of time, but you just want to remember when you sign up for one of those and it's outside of this CARES Act benefits window, that interest may accrue even though you're not paying, and then it may capitalize, so it become a part of your principal, so your loan balance may actually grow. And so that's just something, again, you want to discuss with your servicer before you make that decision. Okay, and then private loans. And so when the CARES Act benefits first started last March, some private lenders were offering postponements for up to 90 days and waivers of late fees, and they didn't at the time indicate any negative marks in your credit report. So if you missed a payment or couldn't make payments, they had different options. But as of right now, those have changed for various lenders. And again, it switches from lender to lender. So you just want to, again, check with your lender because the terms of private loans are, again, set by the lender. So just, yeah, reach out to them because they're the first order of, first point of entry and the first form of contact. And then monitoring your credit report. You want to make sure you check your credit report to make sure information is accurately reported and that your even non-federal student loan information is reported correctly. And so you can actually do that through annualcreditreport.com, and you can have access to your Equifax, Experian, and TransUnion credit reports. And so you can access those for free, actually, for once a week up until April 22, and actually, 2022, and I actually tested, and that was recently extended. But when the pandemic first started last March, I tested this out, and I pulled my credit reports for 5 weeks, like straight. So I pulled Equifax, Experian, and TransUnion to see if it worked, and then I stopped. But it does work, I can say that. And even after that, so Equifax has agreed to allow customers to pull their credit report. So you get 6 free credit reports once a year until December of 2026. And so that's something, and even if your information hasn't changed or you don't think anything has changed, you definitely want to check your credit report at least twice a year because just identity theft or things being misreported, and to make sure things are reported accurately. Because what you don't want is to go to use your credit report or credit for something and you find out there's an issue on your credit report, and you have to, go through take the time and effort to resolve it before you can access what you're trying to access. Okay, and then loan servicer assistance. So you want to contact your servicer directly, and you can see that's a recurring theme throughout this conversation. For any assistance with the following, so lowering your payment, changing your repayment plan. Again, if you're having issues making repayments, that's the first thing you do. Or if you even see that on the horizon, because one of our goals in the section for students and young consumers is also to make sure that those who are borrowers who are currently in repayment do not default on their student loans, and especially for federal student loans, because there are a lot of options and opportunities and changes and things you can do before you get to that point. So we want to do what we can to avoid that at all costs. You can consolidate multiple federal loans, but something to remember is when you consolidate those loans actually, so say maybe you're consolidating direct loans into a new direct loan, but you're also thinking about public service loan forgiveness. When you consolidate those federal loans into a new federal loan, that new federal loan sort of resets the clock on working towards that public service loan forgiveness. And so that's something you definitely want to think about, talk about with the servicer, or you can call the Department of Education to find out more. If you've made any qualifying repayments, would it make sense for your personal plan to consolidate? And it could also change your interest rate, so that's another thing. And then postponing monthly payments while you're in school or unemployed, and then seeing if you qualify for any type of loan forgiveness. And then avoiding scams. And so this is something I mentioned before. So you do not have to pay to receive any of these benefits. And so even if there's a service that may say they're acting on behalf of the federal government, if it's not from the Department of Education or another federal government agency, and again, it's what comes from the Department of Education, no one else, but it's probably inaccurate. And so if it's a company or you see signs like, the bells and the whistles saying that they can provide some type of forgiveness, that's probably inaccurate. And you want to check with federal student aid before you do make any of those decisions. So you can call them. Again, you can also contact them by email or log onto your account, probably send a message. But you don't want to share any of your personal information as it relates to your federal student aid account. So especially your FSA ID or password to anyone. And so you can think about your FSA ID as your federal financial aid Social Security number. And so it's something you don't want to pass out. You want to protect it at all costs and not give it to anyone. And then you want to change your passwords regularly, of course, just to, make sure that they're not out there and no one's able to easily, get into your account or anything like that. And then student debt relief companies, which I alluded to earlier. So you want to be aware and just wary of companies that are offering student debt relief. So it could be a commercial, it could be a sign, it could be flashy lights saying that there's some new program and you can get loan forgiveness. And if you pay them and sign some forms, you don't want to do that. Those should all be warning signs, because if it didn't come from the Department of Education, again, it's probably not correct. And then things to be aware of, requiring upfront monthly fees, because again, these programs I'm talking about through the Department of Education are free. And there are things you can normally do yourself. There are forms that you can fill out yourself, so you don't need to pay anybody to do that. And then they promise immediate loan forgiveness, saying like, hey, if you pay us, there's this new program that started. We can, put your name on the list and all your loans will be forgiven. And of course, they're going to ask for access to your information, so your FSA ID. And again, want to protect that because that's your federal aid Social Security number, and we're going to guard that. And then they may ask you to sign third-party authorization forms that give them power of attorney to act on your behalf, and that's one of those warning signs. And then, of course, the scarcity issue, that this is a limited time offer and it's going to end soon if you don't take advantage of it. And so, and then, with the emails, of course, spelling, grammatical errors, the email address is not the same as, the Department of, it's not a .gov address, it's a .com address, and those types of things you want to keep an eye out for. Okay, and then reporting scams. So what can you do if you're a victim of a scam, or you feel like, someone maybe have tried to scam you? You have first points of entry at Federal Trade Commission, so you can report it via their website. And there's also a hotline number. So, and even if you just Google Federal Trade Commission and scams, I'm pretty sure their website will come up. But also contact the Department of Education. You can call them, give them feedback, and if you've already initiated, maybe started one of these things and you feel like it's a scam, you can stop payment, and then you can contact your student loan service provider to revoke any power of attorney you may have issued, and let them know that you are the only one that's approved to access your account. And then the CFPB listens, and so how do we help and reach out to consumers? Of course, we have our coronavirus page. So during the pandemic, we started, and this is a screenshot of it, but you can access our coronavirus page at consumerfinance.gov /coronavirus, and we have lots of topics that and timely and relevant information as it relates to things that the pandemic may have affected. So you can go there and access blogs and videos and resources that may be able to help you. And of course, our podcast. And so I mentioned this earlier. So I'm really excited because I'm the host of our podcast, and I dropped the link for one of our episodes in the chat. But so CFPB, we have started a podcast, a financial intuition podcast, and we have different types of individuals on. So we've had experts, we've had grad students, we've had current students, and they're all talking about the issues of, as it relates to money, student money, and young consumer money. And so how do we manage these things and navigate as we're trying to achieve our higher education goals. And so we've covered credit, budgeting, grad school, managing grad school debt, like post-grad school. And then, as I mentioned, the next series is actually, which is timely, is going to be focused on understanding your financial aid award offer. And so that series should actually be out next month. And our grad path tool, which I will skip ahead. And so our grad path tool, this is a tool that we have to help you. Yes, our grad path tool is to help with financial decisions. And so within the student life cycle, there's a point, and we probably all remember this, so we know someone who's gone through it, where we applied, we were accepted, we got an offer, and then there's this decision. And between that offer and decision point, there's like this period of maybe 6 weeks where there's you feel pressure to make a decision. You have to find the funding. You're trying to decide what program should you enter, what certificate program should you start, or what school should you go to. And so what GradPath seeks to do is it seeks to, again, reduce stress in that process, where it allows you to take your actual offer and turn that into a plan. So you can take what you're seeing on paper, so maybe the loans or maybe the grants being offered, the scholarships, pop it into this tool, and what it does is you have your school information, so you're able to enter your school information, and we pull different data, and it actually shows your need, if you actually have a need, or your surplus, and if you plan on taking out loans, how much those loans will cost over a period of time. So over the period of throughout your college experience, but also post-college. And even to the point where you can actually calculate, if I take out, say, $10,000 in student loans, I'm going to need to make this much an hour, at least, to cover those loans. And so it just gives a different perspective, especially to a young person and a family who may, not fully understand the actual costs. So again, I think about my college experience, and I had no concept of owing $10,000 and paying that back, and what does that mean? And of course, what does it mean to my future decision making? So please check this out. We'll also, another plug is that we will be releasing a webinar. We actually do a demo of GradPath next month. And so to take a deeper dive into this, because I gave the high level overview, but to take a deeper dive and answer some of the questions that we hear from students and families as it relates to the tool and how to use it. So for more information, I will say you can sign up on our website at our student, in the section for students. So we have a email list, and you can sign up on that email list, and all of our work, especially when it's released, it's sort of funneled through there as an outreach method. So, and then so our mailing list, as I mentioned. So we have our mailing list. We have free bulk printing and some of the CFPB resources. We have our Ask CFPB box. It's our Ask CFPB box. I like to think of it as like a Google One box. And so you can type in a word or a phrase as it relates to personal finance, and then it will crawl our website and pull back related information. So that information could be our booklets, it could be additional resources, videos, any one pages we may have, but all related to that topic. And so it's easy to use tool to, pull back information on our website. We have our money topics, and so these are curated sections on the website for students and practitioners. We have our blog that's constantly updated as it relates to what's happening as far as personal finance for individuals. And all of our resources are in multiple languages, and so multiple common languages. So if you have your resource in another language, more than likely we will have it. So you can also access that during our website or by using our website. And so opportunities to help shape future resources. So we have our financial intuition platform, which we are creating for higher education institutions. So that research is currently happening. But one thing I will mention is our GradPath tool for families. And so I talked about GradPath, but we're working with our contractor to develop a different version of that. So we're in a very, very early stages. And so we understand that families often help pay for a child, a grandchild, and other family members' expenses. And so one thing that families want to understand is, how does this impact my personal finances, but also how will it impact my future, maybe retirement security. And so we're working on that new tool to help those families understand how students' college education will, again, impact them, and maybe some better ways to pay for college. And so as a part of that, as I mentioned, extremely early stages, we're conducting listening sessions. And so those listening sessions are really to understand how families are navigating some of those issues as it relates to saving and paying for college, but also families who have paid for college, and to maybe take a look back and understand their experiences and how we can use it to create something to help families. So the listening sessions are going to be taking place in the near future, and I'll actually drop the link and the email address and the phone number to, if you're interested or you know someone who may be interested. And again, it's for prospective borrowers, and so families thinking about paying for college, and then those who have paid and want to take a look back, and because we want to hear from you, so we can develop the best possible tool to help families navigate this experience. And so the listening sessions, in short, will happen via video call, and so they'll happen approximately over 90 minutes. And again, we partner with App Associates, who's an independent research organization, to help conduct these listening sessions. And so you can sign up via the survey link if you're interested, or you can call in, or you can email, or if you know anyone, feel free to share the information. So thank you very much, and I think that's it, and I will hand it back over to Heather, and we can open it up for questions. So thank you.
Thank you very much, Brian. That was really informative. And every time I get to see you present, I learn something new. I'd also like to thank Tracy and Susan, our events management team, for handling everything in the background and keeping things going so smoothly. I did see one question that popped up, which was somebody asked if you had a link for grants and scholarships, or if you knew of a site where there was one location where you could kind of look up grants and scholarships.
Yes, so that's actually a great question. And I know that so we don't have one on our website, but the Department of Education does. So, and I don't have the actual link to the website, but if you Google like Department of Education and website, I know they provide, or Department of Education and Scholarships, I'm sorry. I know that their website provides more information on that topic.
Okay, great. Thank you. That's helpful. And good to see the links to the events you're having for your podcast and your listening events. That's wonderful. Okay, so I don't think we have any more questions today. It doesn't look like anything else has popped up in the chat. So that tells what a thorough job you've done today, Brian, in answering all the questions. I wanted to let everyone know that the next webinar is on, the next CFPB FinEx webinar is on understanding the women's wealth gap. And that's going to be March 31st. We squeaked it in so it could be on Women's Month. And it will happen from 2 to 3:30. And we have several speakers for that event. That's why it's going a little longer than most. But of course, you can always leave at your convenience. For those of you that get our mailings, you already have the login credentials for this because we sent them both out on the same announcement. For those that don't, you can email that CFPB_FinEx@cfpb.gov box. Or go to the Adult Ed webpage and put your email in, and you'll receive announcements for the future. Okay, that concludes our session for today, and I hope to see you all at the next session on the 31st. Have a great day, everyone.